Hello everyone, welcome to the Trendline Investor channel. So in today's video, we're going to discuss how to pick good stocks for investment. So basically, I'm going to teach you from a technical perspective, which stocks should you be looking at if you were to select stocks from a list of stocks from a scanner. Okay, so let's get started. But I want to make this disclaimer when we get started with the videos. This is purely an educational video, and I'm going to teach you a lot of things around investing through technical analysis. So I am not a SEBI registered advisor, and this information provided here in this video is purely for educational purposes. So let's get started. So the first stock for today is Sharda Cropchem. Now I did post this video on Twitter some time back, and also discussed this video a couple of months back. So Sharda Cropchem is actually a very good company from a fundamental perspective, and it has a market growth of around 5,000 crores. You can call it a mid cap because it has crossed 5,000 crores. It has a PE of 14.8, ROC of 20.8. Now, as I always say, ROC, if it is greater than the PE, then probably it might be undervalued, and there is a chance that this stock might head higher, right? ROE is also pretty good, and the sales growth has been very good. Last 3 years, sales growth has been 26%, and the PAT growth has been 19%. Now, taking a look at the annual numbers, basically the P&L statement for the last many years, if you see this stock or this company's sales has gone up from 600 crores to almost 4,000 crores. Now that's a phenomenal jump, especially even if you consider the last 2 years, we've gone up from almost 3,500 crores to 4,000 crores. That's almost more than a 15% jump in the overall sales. Now, the other point to note is, along with the rise in sales, the operating profit also has gone up, right? We have seen going up from 450 crores to almost 640 crores. Operating margins have gone down. So we've been around the 19% mark. But last year there was one off quarter because of which the company posted some bad results, and that's affected last year's margins. But overall, I think from a operating margin perspective, I think they should be able to regain that in the next coming quarters, because that one quarter was purely because of forex losses that they had, not really operating losses that they had. So PAT has also been positive, very continuous steady trend. So overall, from a fundamental perspective, this is a very good company, and this stock is now breaking out from a very long consolidation. Now, I mentioned in the beginning of this video how to pick stocks from a scanner, especially if you're looking for investments. You need to know that when you pick a stock for investment, it has to be entering a stage 2 uptrend. Right now, if you don't know what's a stage 2 uptrend, you need to watch one of the videos I made. The link should be available, or you can just go to my channel and there's a separate playlist and you can watch that. But here by stage 2, what I mean is the stock has been consolidating here after the COVID crash. The stock went almost sideways, and then the stock did go up from almost 500 to 700 levels, but then it came again all the way back down. It did correct quite a bit, and then we had a nice cup and handle pattern over here, kind of rectangle consolidation, and now again we're breaking out. Right now, this stock actually first breakout was here, and now it is just slightly above that. So in terms of the reward, the stock actually has not given much reward to its shareholders since 2017. Right. So the last 6 years, the company has not done well. It has not given much returns, and given that the company has been doing well in the last few years, I think it has very good potential for the price to kind of appreciate and head higher from here, especially since the stock is still around that same consolidation zone. We are slightly 20% above probably, but I think still there's a very good potential for the stock to head higher. Also, the volumes have been good. We had a amazing breakout this week with volumes. The markets have started to probably stabilize a bit, take a pause probably, but Sharda Cropchem did very well, except for the last 2 days. We had a nice consolidation, but this week we had a nice breakout along with volumes, and CCI and RS also have been pretty good. So from that perspective, Sharda Cropchem is one of the first bets that probably you can take, and you can probably, if you really want to buy, I would buy at current market price 560. Keep a stop loss at the swing low, which is 470. The swing, usually stop loss is when you try to find a stop loss for investment, you have to keep it at the swing low on the daily charts or even on the weekly charts here, right? That is a stop loss of 16%, and we're going to look for targets of 1,000, which is 78% from here. Now, one point to understand from an investment portfolio is to let your winners run. So if your stock is in profit and if you're making money, don't sell it off immediately and get out. That's not how we do investment. You need to let the stock run. So in case it does very well in the next couple of quarters, couple of years, the stock can head even higher, right? So we're looking at targets of 1,000, which is probably around the upper end of the channel, probably 1,200 as well. And that's the first stock for today, Sharda Cropchem. Now, moving on, the second stock for today is Snowman Logistics. Now again, you will see a clear pattern in my stock picks. These companies have done well in terms of sales. The operating profit margins also have been kind of stable. Now, in case of operating profits of Snowman Logistics, you see it went all the way up and we're almost at all-time high levels, right? So the last 10 years, Snowman actually has done well in terms of the sales, in terms of the operating profits. They have been growing phenomenally, right? So sales has been growing at 20% CAGR, last 5 years growing at 17% CAGR. Also, the profits have grown 32% CAGR and 42% CAGR for the last many years. Also, it's a very small company. P is pretty high. But I'm not sure on the industry what's the kind of PE. But I feel if the company grows from here very well and they've been investing a lot and if it does very well, then the PE probably can come down a bit and ROC probably might head higher, right? So overall, this company also has very good operating margins. So last 1 year has not been great, but it has been able to maintain the operating margins around 25-26% consistently, right? Now, which means this company actually has good, operational efficiencies. They have been able to make good margins over here. The problem with this company though is the interest, right? They have been paying pretty high interest. 22 crores out of the 89 crores is going towards interest, also depreciation, right? So hopefully at some point this depreciation will be less and it might add up to the overall PAT numbers over here. Overall, also the PAT is at an all-time high, and for that reason is why I'm discussing Snowman today, because also from a technical perspective, it has broken out. So Snowman Logistics is a second company. So from a technical perspective, so we had a crazy move. I remember buying the stock somewhere in Diwali of 2021. We had a crazy move and then it kind of went down all the way and then it formed a nice base. Now, one thing I want you to remember is when a stock is in a downtrend, do not buy that stock yet. Let the stock consolidate and then break out and form a higher high on the weekly charts. Now, it's very important to look at when investing, you need to understand that the stock needs to have a very long base. Now, in this case, we had almost a 2-year long base, a 1.5-year long base, and now we are breaking out. Now, this week we had a very strong breakout along with volumes, with CCI and relative strength also doing well. Now, remember, in the entire market, this stock has not done well, but suddenly it has started doing well, which means this stock is outperforming the markets and it can head higher from here. Now, any dips towards the levels of 40 could be a very good buy in Snowman, and this is a very strong bullish candle and we have broken out and we are also forming a high. So from a technical perspective also it looks very good. So you can buy the stock at current market price, 44 levels. Always keep a stop loss around the swing low over here or the weekly low over here, around 36 rupees or 18%. I'm going to look for targets of around 66, which is 50% from here. Now remember, if this stock 50% is somewhere around that level over here. Now, if we break out of 66, which is a very, very major resistance, we can head to probably 100 levels as well. So, as I always say, do ride the trend. It's very important for your investment portfolio to not sell off your winners. So, keep that always in mind. So, that's the second stock today. Now, if you did like my analysis, don't forget to hit the subscribe button and like this video as well. Okay, and do a favor for me by sharing this video with your friends. Okay, so let's move on. We have 4 more stocks for today. The third stock for today is Rail or Texmaco Rail and Engineering. Now, again, a company where the sales has been growing steadily from 1,100 crores to 2,000 crores in the last 6-7 years. PAT operating profits also have gone up steadily. We are almost all-time high. Not really, but here we have 160, we have 145. That's because of the low margins we had this year, right? It's 9%, that's why we had 160. Here, 6%, 145. Now, here also the interest has been pretty high. Now, this is a company which has majority of this business in the rail segment. It builds wagons and all of this, and some of its business comes from other areas as well. But so interest, probably it's pretty high, but I think if they're able to service the interest and if you can find more details on this, that will be great. But I've just looked at the PAT and the sales. Overall for me, the PAT is not great, but the sales have been very good. They've been able to increase sales from last year to 2023. It is a phenomenal increase in the overall sales. So a very small company, 2,000 crores, 84p, it's pretty high. ROC is 6, ROE is 1, sales growth is 15 for the last 5 years, 7% for the last 3 years, and PAT has grown at a stage of 16% for the last 5 years. Now, one thing that you want to consider is now this stock from a technical perspective is breaking out from an 8-year downtrend breakout. Now, when you combine this with the fundamentals, yes, fundamentals are not very great, but the sales has been very good. Now, in case the stock is breaking out from a very long downtrend after very long consolidation, there should be something probably changing in the company which we might not know. Now, if you have a full-time job and if you don't really have time, and if you see sales increasing, the PAT is not really increasing that much, but the stock is breaking out, then probably it's time to buy that stock because something might change because of which the PAT might increase, or the company might have a very strong growth in sales because of PAT also will be higher, right, going forward. So That's why I chose Textile today, because even though the PAT is not great like Snowman or like Sharda Crop, I feel the sales is increasing. So the company is probably doing something right, just that sales PAT is not really increasing. So for that reason, I chose Texmaco Rail today. And here, if you see, this stock is breaking out of 8-year breakout, right? So we had a strong consolidation here, and we're breaking out with good volumes. So the volumes have been excellent in the entire move up. The volumes have completely risen, and now also we're having strong volumes. CCI has been very good. RS also has been very good. So you can buy the stock at current market price 7.5. Stop loss of 22% is pretty deep, I understand, but you might want to wait for some consolidation and buy it probably. We look at targets of 63% from here, which is 2.8 times the risk that we're taking. So that's textile that we've discussed. So the next stock is Indian Hume. Again, a company which lays pipes and all of that. A very small company, 960 crores. You have a stock PE of around 7.3, ROC of 10.9, 8.28. So not very overvalued in terms of PE and ROC. But here again, the sales and the PAT is not growing. Now again, remember what I'm looking at here, the sales and PAT is not growing, right? So which means here, if you see 2018, we had 1,500 crores. We almost went up, but then we are again going down, right? So the sales is definitely not growing, but overall the company has been able to manage a flat trend in terms of sales, right? Now I'll come to why I'm discussing this stock shortly. So operating margin has been around the 10% mark. It has been pretty stable. Interest has been okay, kind of going down after hitting that 77 crores. It has gone down now. Depreciation is also kind of flat. PAT also has been flat, right? We are around the 50 to 80 crores mark. Now, why am I discussing this stock? Reason I'm discussing this stock is because of this pattern that we're seeing here. Now, since 2008, the stock kind of went sideways and we had a breakout. Then we kind of retested this once, and again we retested this once already. So it's a kind of a triple bottom here that we're forming, and we have broken out with amazing volumes. Now, it's quite possible that the company has given some guidance, and I also had some of the inputs from some of the Twitter followers. So they said this company has a very good visibility in terms of order book. I'm not quite sure about that, but if the company really has a good order book, and if the company has given some good guidance, then probably that's why the stock is breaking out. So usually markets are, looking at results a couple of quarters ahead. They try to predict what's happening, and that's what the markets are probably doing here with the breakout here this week. We had a very strong breakout of volumes. Market is probably expecting that the bad phase is over for this company, and it probably might grow going forward, right? Also CCI, this is a monthly chart, so CCI is yet to come here, but on weekly it's already bullish. Leader strength also is bullish on the weekly charts. So this is the next stock for today. We're breaking out from almost 6 year 7 year downtrend here, and you can buy the stock at current market price around 200 levels, 14.5% stop. You're going to keep a target of 86%, which is 370, which is somewhere around that zone over there, right? Now these stocks, when they're breaking out after a long time, like almost this is a 6-year breakout, we might literally cross all-time high in the next 2-3 years. So you need to have patience if you want to really have some good returns in your investment portfolio. So for targets of 370, it's going to be 5.8 times the risk that we're taking. So the last stock for today is FM Goetze. Again, a small company, P of 20.3, 15.5 ROCE, ROE is 10.9. Here, the company has been having good sales growth of 15% and profit growth of 45%. Now, these kind of companies, you need to probably take a look at it, especially when the technicals are looking very good. You need to take a focus. You need to focus on these stocks because this company has been doing well in terms of sales and profit, but the share price hasn't been doing much. So it's probably time for the share price to catch up and match the performance of the company's fundamentals as well. Okay, so here we've seen an all-time high sales, 1,600 crores, which is a very good growth. Also, here operating margins are not really at all-time high. We had all-time of 227, but we're almost there. Operating margins have slid a bit, but I think we made a bottom here probably, and we are probably heading higher. And PAT also has it an all-time high, right? So overall, from a fundamental perspective, this is definitely a good company. It has been growing its sales steadily. PAT has been going up steadily. Margins are pretty stable. So from a fundamental perspective, this should be okay for your portfolio. Now, from a technical perspective, this stock is now breaking out from a beautiful 3-year inverted head and shoulders pattern, right? Now, this is my most favorite pattern in the entire technical analysis world. Now, Stan Weinstein says, if you see an inverted head and shoulders breakout on the weekly charts, and if it is coming with volumes, it's definitely a stock that has to be in your portfolio. Right now, we don't know how much higher the stock will go, but the signs are definitely good. Good sales, good PAT, charts are good, inverted head and shoulders, which indicates end of a downtrend, and probably we're going to see some good returns over here. Okay, now for that reason, this is the last stock. You can buy at current market price 368. Stop loss is 15%. and we're going to look at targets of 80% here, which is 5 times the risk we're taking. So the last stock for today is Strides Pharma. So here I'm not discussing the fundamentals because it's not really a great company. But again, this stock also is breaking out from a nice rectangle consolidation. Here we are seeing a nice breakout this month with good volumes. So CCI has been good. Relative strength also has been very good. Fundamentally not very great company. It literally did very bad last year. It has been doing well in the last many years or so, but last couple of years the results have been very bad, because of which the stock has been a downtrend, and it has kind of now about to break out from a long consolidation of 1 year base. So you can buy the stock at current market price, keep a stop loss of 12%, look for targets of 90, which brings us to a risk reward of 7.1, which is very good. So I'm basically looking for targets of around that levels over there, which is the next major resistance on the weekly charts. So these are 6 stocks I want to discuss today. In case you want to know how to invest in a portfolio, how to do your position size, allocate money, do check this out. I've been discussing this in the last 3 weeks, so I'm not going to discuss it again, but you can check this out and see how you want to invest in your portfolio. So I've given a clear set of guidelines over here. Now these all are clearly for educational purposes. You might want to take some practice before you dive into actual investing. Also, here is some examples of Deepak Nitrate. So first buy is over here, second buy is over here. So you can look at the guidelines and then come to this chart and also see how you buy stocks for your investment portfolio. So that's it for today. I hope you enjoyed this video. I do enjoy teaching you, and thanks for all the support that you've given me. So that's it for today. I'm going to leave you here. Take care, stay safe, and trade safe. Until I see you in another video. Bye-bye.